What's up guys, Vulcan Trader. I want to do a video on the crypto trusts and how they work and premium to NAV or net asset value and how you look that up and know whether to buy one of these or not. Yeah, this is how I actually outperform in my stock account. I outperformed the price of Bitcoin last year by using a strategy based on this. Like I got, I don't know, 412% return on my like Fidelity stock account or Fidelity Roth accounts, whereas Bitcoin, let's see, Bitcoin 2020 performance, I think it only did like 300 or something like that. So here, we'll just pull it up, I'll do it. Bitcoin for 2020, it was, maybe held it for the whole year, was, yeah, like 250%, something like that. I got 400 something percent, and this is how I did it basically. And kind of found it by accident, but so I was holding GDLC, and I held through this drawdown through the Corona crash or whatever last year. I just knew there new money. I'd bought it like here, crash, and which is a pretty big drawdown actually, like 50%. I held it through, and then it shot up, gosh, just a ton, like 200, 300%, whatever this is, in just 3 days. And I sold it like right here after buying it here, and I was like, what happened there? And so why did that happen? So all these are, there's no Bitcoin ETF right now. So what an ETF is like your like Kathy Wood's ARK fund, or there's FFTY, there's a SPY ETF, which is just, it tracks S&P 500, but basically what an ETF is, it's a BAS. Either it can track a single asset or multiple assets, but the shares of it, they can create more shares or take shares off based on whatever they can do it live based on whatever the price of the underlying actual security is. So like if Bitcoin went up 10%, then the ETF started going up more, like 11 or 12, they can create more shares in order to drop the price back down in line 10%. And so they only get a little bit out of line, the ETFs. But these are trusts actually, are not ETFs. And the reason is because a Bitcoin ETF hasn't been approved in the United States yet. There's one in Canada, maybe, I think. But anyway, and same thing last year. So what a trust is just a company that or in this case, it's just a company that owns Bitcoin, or Ethereum is the Ethereum Trust. It's Grayscale is the owner of it, and then GDLC is a Grayscale Digital Large Cap Fund, which is the top 5 cryptos weighted by market cap, or it used to be until they took out XRP, I think. But anyway, all these is trusts. It's just a company, and they hold a certain amount of Bitcoin, Ethereum, or a mix of them. If it's if they're holding multiple, like GDLC or BitW, same way, it holds like 10 different ones. And then they take that, they have the shares trade in the open market of that company. And so people can buy and sell those shares at whatever price they want. And sometimes they get really out of line. And so here's another piece of it. So anytime a company IPOs, there's a lockup of 6 months, a year, it just depends on the company. But I think it might be a minimum 6-month lockup for any new IPOs. So that means that there's a low float. So say if there's 100,000 shares, and then you got half of them locked up, then the price is trading as if there's half of them. So basically your supply is cut in half, which means they can have more extreme moves to the upside or the downside, depending on if there's more buying or selling. But if there's more buying, then you get more extreme moves to the upside. So that's what's happening here. GDLC was still during the lockup period, because some of these go for like a year, I think. So this one would have been trading for like 6 months, something like that, and it's still in the lockup, but you just didn't see until we had the crash, big bull market, Bitcoin skyrockets after the halving, and then boom, flies up. And so after I discovered that, then I was doing the same thing with Ethereum. Like Ethereum did this previously. This was one of those, like, Ethereum was only worth $5 here, but it ran all the way up to $15. And then I was buying some here, and then I sold it up here when you had big premium expansion, giant move up here. And then same thing, then waited till the crash, and then I didn't get any of that, but eventually it went all the way back down to the net asset value of the value of the actual Ethereum in the trust down here when the market crashed again. And then, well, actually, no, it didn't crash. Ethereum was just kind of flat, I think, during that time. Got back down to it. Or bought it maybe like right here after it turned back up. Then you have a big premium expansion again. And so I don't know if this will continue, but if it does, and say this next run here, then basically you set whatever the move is of the underlying crypto. If you buy it close to the value in the company, you'll at least get the price appreciation of whatever the underlying crypto is, and maybe you get more. So basically swinging that one. I did the same on BitW last year. I missed when it first came out. I had a huge run from 30 to 180. I missed that, but it was at over 50% overvalued even right here, which is ridiculous. But anyway, and then it dropped back down here. It's close to the NAV again. I bought like half position here, went up, I still held it, went back down again, and then bought it somewhere in this neighborhood, added more, got my full position size, and then I sold it right here on the outside reversal day, right here, and broke the prior day low, no joke. So, but combination of all those trades is how I ETHE, GD, and I got, I think, yeah, GDLC, yeah, BitW, and then but anyway, so how you look it up, so whatever the company is, so Grayscale is the first one to come out with these. But the longer it trades, the less this happens. Like GBTC is it's been around for years, like since 2017 or longer. But as it trades longer, the premium only maybe moves within 10% of the underlying. So this one's been around for a long time. All the shares, not many of them are locked up anymore. So it has less of this happening, just within a 10% range. So you're not really going to get it on this one that much. So anyway, so Grayscale is the first company that has most of these. If you look at my list there that I have, I think it's grayscale.co. Yeah, grayscale.co. So if you go to their investment products and you go to, if you want to figure out what the NAV is, so you don't, because if you buy it over the NAV, it can crash all the way back down to it, and so you can get yourself a bigger loss if you overbuy it, right, than the underlying crypto. But like if we look at the diversified is like GDLC. If I wanted to see, I want to buy GDLC, is it too overvalued compared to the underlying? You go here, you go to performance, and right here, market price per share is 26.94. The holdings, the value of all the crypto in the trust is 26.4. So it's basically right at NAV. You see right here, that one I showed you, where the market price per share shot up a ton more. I sold it at 21, but it was still only worth $7. And then it crashed back down, and buy more, but except it's still a little overvalued here. So that's how you do it. You find whatever the company, so like this one's Grayscale, GBTC's Grayscale, and then ETHE is also, you see here, Grayscale. But then there's BitQ. BitQ is actually an ETF, so it'll follow the underlying companies that are in it. If you do that one's not a trust. But the BitW, for example, so it's Bitwise 10 crypto index fund, so we do Bitwise 10 fund, whatever. And then Bitwise investments, Bitwise 10 crypto index funds. Right, yeah, if you're on like their main site, you would go to funds here, Bitwise 10 crypto index fund. They got a DeFi one coming out, but it's not out yet. And then the intraday, so the NAV is $40, the market price is 44, so it's a little overvalued, maybe 10% overvalued, but if Bitcoin goes up 10%, then it'll get to it. So like, I bought it was Friday, I think it was, at 42, and I was like, well, Bitcoin looked like it was about to make a little move, and then that was at like 38, so I bought it a little overvalued, but I expected Bitcoin to rise up What was it, Friday? What was Friday? The 11th. So just right there. There. I expected Bitcoin to go up by over the weekend, hopefully, and then it did. So the NAV on it is now up to 40. So I bought it at 42. That the NAV's now at 40. So there's times when that happens, it might not go all the way back down to the NAV, and maybe the underlying crypto catches up to it. You get to think about that too. But anytime it gets close to it, maybe you start averaging in if it's within a 10% range. But this one's still newer, maybe only, let's see, December 20, so it's not even a year old yet. Once it reaches a year old, the lockup expires. You can Google how long the lockup period is, but I think it's a year for most of these, and OBTC might even be longer. But so that's another new one that it hasn't ever had a run yet, and the premium's starting to expand. I bought it too early, unfortunately, here, and then I lost some money on it on this dump here. But yeah, so just because Bitcoin dropped, and then I bought it with a little bit too much premium, unfortunately, because I got a little greedy after doing so well on all the other ones last year. But maybe with some luck this one will do that again, because it's still in its lockup period and hasn't had a run yet. So I got a little up position in that, like I talked about in my market review videos. And so, but that's how you look up on the same thing. OBTC is Osprey Bitcoin Trust, so you do the same thing, Osprey Bitcoin Trust. So yeah, just try to not buy it more than 10% over the NAV. And sometimes you get better performance on these, actually. I mean, there's always risk. So the company holds not your keys, not your coins. So you should always have a bunch of your own actual Bitcoin. But, you could still do this with some of it, because anyway, that someone stole their Bitcoin, they're not going to get it back. And then, the value of this is going to go down. But they got some other ones coming out. So they'll do... qualified investors can buy these before they actually start trading, but so you can kind of sign up on they'll place to sign up or whatever to figure out when they start trading, and they'll alert you, or you just look up Osprey here. Every so often I'll look up Osprey and see if the Polkadot one starts trading, for example, if I wanted to buy that or whatever, or look up Grayscale or Bitwise if I want to say, oh, did the DeFi one start trading yet? No, we just got the Crypto 10 Innovator. But those are the three companies I know about now. There's Osprey, Bitwise, and Grayscale that have trusts like these. And but yeah, if we went to the Bitcoin one, they actually, if you wanted to do a long-term holding one, this one's a little better than the Grayscale, because they're what is it, the fee they charge per year. I think Grayscale's like a 2% fee, and this one's like a 0.5% or something. So, but anyway, the NAV is 13.52. This one's a bit more overvalued now. I bought it. Well, I sold it, bought some MC, bought back in. But anyway, it's a little bit overvalued now. Maybe you could wait, but it's a question of whether it'll happen or not. Maybe position size small, meaning whether or not it'll go back down close to NAV. Usually when it gets closer, it doesn't stay there too long, or doesn't revisit it until it has a premium expansion so far. But there's companies like BlockFi that have started this weird hedging thing with their customers' Bitcoin funds and capturing the premium. So this strategy might not work anymore. I don't know. We'll have to see. Wait till this next leg of the bull run, hopefully the second half of this year, and see if it does still work, if these start blowing up again. But if they don't, it's the single asset ones, at least they'll do something somehow with their customers' funds and maybe sell it, capture the premium or whatever to hedge and make some profit off the premium. Whereas the diversified ones seem, even GDLC, even though it's been around a while now, seems to still have this phenomenon. Some only maybe 25 to 50% premium at times, whenever like right here, and that's probably because it's harder for them to hedge all 5 of them. That's my thought, if this does go away on the single asset crypto trusts. So that's a lot of information to take in, but this is how I think about it. And these things, if you want to trade them, you really need to know this stuff. But anyway, so there's a market price, there's the NAV. So you want to try and get it close to NAV, like I said. And but yeah, this is, I think, a good way if you're trying to get exposure to crypto. These are some good ones to buy, but make sure you don't buy them above the net asset value. And then one day we'll have an actual Bitcoin ETF, and then you won't have to worry about that. But yeah, until then, this is how you play those.